Today we'll be talking about how transaction banking has evolved in the last, let's say, 5 years, right? If you look at historically, banks always offered account services, trade finance, particularly with corporates. We're talking about corporates and business banking and SMEs, institutions basically, right? But the needs of these segments have evolved. Should I say, from just being regular account services and CASA to what could be specialized services, talking about payments and collections and having supply chain finance, liquidity management, independent of whether it is an international institution or domestic. I mean, you still have payments and collections and liquidity, and this is not necessarily limited to corporates and large corporates. You find this increasingly with mid corporates and SMEs. Particularly if you look at the SME segment, I mean, it's not limited to. I mean, you don't have the finance function and a large team with a CFO who manages it. In most situations, it's the CEO who gets to manage directly, or the CFO who's is one finance function guy. So what essentially this means is that the cost of servicing has to be much lower in order for these institutions to avail what could actually be transaction banking services. And that's really where digital plays a big role, right? So today you see, institutions are being onboarded digitally. So it starts with having a good digital onboarding and empowering the customer with what could actually be a complete end-to-end digital experience that transaction banking gets to offer. Now, the essence of it is, why should a bank be investing in transaction banking business, and what's in it for a bank, right? I think to start with, it's firstly a defense line, because if you aren't doing it, someone else is doing it, and don't be surprised if your customers walk away, because end of the day, offering customized solutions that are catering to my need as part of my segment or my industry that I belong is inevitable, right? I mean, this is clearly a need of the day, and if you aren't doing it, someone else is doing it. But more importantly, having a good transaction banking business helps you create two things. One, of course, customer stickiness, as we saw earlier. But the more important part is your ability to actually have a better float and have a better uh, cost of funds, right? I mean, if you're able to actually have account services and build a strong CASA book, then it simply means that you actually are being able to manage a much better, lower cost of funds. And how does stickiness really happen? I mean, is it just offering great services? But it's more than that. And now with what we are calling as API banking, and what we are seeing with a lot more of partnerships or collaboration, should I say, with fintechs, you find a whole host of services. I mean, the basics, right? I mean, being able to offer payroll, expense management, accounting services, being able to plug into an ERP, which is a multi-tenant ERP that a customer can log into, e-commerce platforms, being able to offer what you would call as invoicing services, a whole host of them. So what basically it means that a bank essentially is partnering or collaborating with fintechs that enable them to offer a lot of these services through its transaction banking platform to its customer. And that creates a much higher degree of, let's say, stickiness, because once I'm plugged into an ERP, for example, then it's very hard for me to move out of it. And it gives a better view of what's actually, the cash flow, what's the supplier customer ecosystem of your client. And as a bank, you get to benefit much more than just having a customer onboarded. And I would say that the critical success factor for any transaction banking business, three C's: collaboration, as we saw, offering fantastic convenience, right? I mean, being able to, for example, if you're an SME, having a timely tax payment is critical. So being able to actually have advanced tax payment facilities, payment services, If you're for example a logistics player, I mean, then collections is critical in being offering very convenient collection services. Uh, Actually, segment focused products that are relevant for what my needs are as a customer. So it's basically convenience, which is the second C. And the third is no brainer, which is great customer experience, right? Right from onboarding the customer digitally to servicing the customer digitally. So if you can provide great customer experience, then that's reasons for you to actually be making sure that the customer is happy. So to summarize, I think you're actually talking about a collaboration, B convenience, and C customer experience. The three C's. And if you were to have these in your offering of transaction banking, then well, you actually have you got the game.